Over the last 5 years, Costco has rewarded shareholders quite nicely. They're now up 107.79%. If we take a look at the 1 year chart, we can see that Costco climbed up about 30% over the course of 2020 before it began this sell-off, which has now got Costco down just shy of 20%. So the question remains, is Costco now presenting a good buying opportunity?
Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at one of the largest retailers in the world, Costco. The aim of this video is to give you a starting point for your research into Costco as an investment, and we'll be covering everything from what the company does and their business model, their latest earnings, the dividend, the current valuation, and so much more. Now, if you're new here and you enjoy financial content with an emphasis on the stock market, go ahead and hit subscribe, chuck on the bell notification, and make sure you stay tuned for future videos. Now we got a lot to cover. I'm your guy. Let's get started.
Taking a look at the stock quote here today, we know that Costco trades on the NASDAQ under ticker symbol COST, C-O-S-T. Just note that all dollar values here are in US dollars. And we'll start up the top here with the price. Costco closed on Friday at $317.32, down $1.72 or 0.54% on the day. They're a fairly large company with a market cap of $140.463 billion. And they're currently trading at a PE ratio of 32.45 over the last 12 months. Their earnings per share over the same time period is $9.78. And throughout the last year, they've traded anywhere between $276.34 and $393.15. Now, they don't pay a very large dividend, but we'll get into more details on this later. They currently pay $2.80 US, which equates to 0.88% of the current stock price. Now, a brief overview of the business. Costco offers their members low prices on a limited selection of nationally branded and private label products in a wide range of categories. Now, this produces high sales volumes and rapid inventory turnover, which when combined with the operating efficiencies achieved by purchasing in large volumes, efficient distribution, and the reduced handling of merchandise through their self-service warehouse facilities, Costco is able to operate profitably at significantly lower gross margins than most retailers. They're currently the third largest global retailer based on overall sales, and they're trailing behind Walmart and Amazon. These two larger retailers obviously do have a few key differences. Walmart, for one, is not as focused on volumes, and therefore they're able to open much smaller stores in more rural areas. And then Amazon is predominantly an online business, so they have access to a much larger customer base. Costco currently has 803 warehouses worldwide. And if we go ahead and take a look at the map, we can see that there's lots more room for Costco to grow as they continue their global expansion. If we take a look by country, we can see 558, so the majority are found in the US. We have 102 in Canada, 39 in Mexico, 29 in the UK, and then we get down to Iceland, France, and China, who all only currently have one store. This to me is quite positive, as despite how large Costco has become, they still have a lot of room to grow within these markets or even potentially into new ones. Now, Costco operates on a membership model, and the annual fee for this is about $60 in the US and Canada, and then internationally, it varies slightly based on a few factors. Now, we have actually seen a trend and a push for many companies to move towards the superior business model of reoccurring income from member or subscription services. However, this is not a new initiative for Costco, and they currently have 107 million cardholders. Now, it's one thing to get a customer, but it's another thing to keep them. Costco currently has a 91% renewal rate in US and Canada, and an 88% renewal rate worldwide. This is another huge green light for investors, as it shows that Costco customers continue to see value within the membership and continue to purchase it year in and year out. Now, Costco carries a set number of SKUs, and that comes in at approximately 3,700 different items, which are available for purchase within their warehouses. As mentioned before, Costco does focus on a selection of nationally branded and private label products, which means overall they stock significantly less SKUs than other large retailers. However, I would note with Costco's online business, they offer anywhere between 8,000 to 10,000 SKUs online. Now, over the years, Costco has developed some private labels. Kirkland's signature products are high quality, and they're offered at prices that are generally lower than national brands. This helps Costco lower costs, differentiate their merchandise offerings, and generally earn higher margins. Costco is essentially able to offer extremely similar products to that of a national brand at slightly better prices. Now, Costco customers have grown to trust the Kirkland brand and this recognition allows Costco to sell Kirkland products alongside national brand products with an ability to compete on these items. Now this is another great value for Costco, as they continue to grow these private label brands, they're able to increase their margins and lower their reliancy on national brand products. I definitely think this is a strong strategy, and I believe that Costco will be able to continue to execute it in the future. Finally, we have Costco's omni-channel expansion. Now this is really just a fancy word for saying Costco sells their products in multiple different ways. Now the obvious one is Costco's online website, and this complements their warehouse business quite nicely. It adds a convenience when purchasing big and bulky products, and it also allows them to sell services such as delivery and installation. Costco continues to grow their online grocery side, and they've recently expanded into same-day fresh delivery. Now, as Costco continues to grow their multiple channels of sales, they're doing so through some key acquisitions of areas in their supply chain. A great example of this is from last year, where Costco actually purchased a logistics company to assist in their growing e-commerce department. Innoval specializes in storing and moving items of all sizes, including furniture, large appliances, etc. According to Costco's statement, Innoval's logistics network boasts coverage of 90% of the US and Puerto Rico. So right here is a key example of how Costco is continuing to innovate and grow, allowing them to best fulfill their customers' needs. Now if we take a look at Costco's historical performance, I'll be using some of Phil Town's Rule 1 numbers, and this can be found on Phil Town's toolbox. Just chuck it into Google, and he has provided a great platform that allows you to both find and research publicly traded companies. So if we have a look at some of the numbers here, in this box up the top we have the MOAT numbers, and all figures displayed here are the compounded annual growth rate. And first up is the book value per share plus dividend growth rate, and this has been trending upwards quite nicely with an 8.8% on the 10-year, 16.1% on the 5-year, and 26% on the 1-year. Earnings per share growth has also been quite positive, 11.9% on the 10-year, 11% on the 5-year, and 9.4% on the 1-year. Now the sales growth could be slightly better, but it does seem to be moving in the right direction, 8.1% for the 10-year, 8% for the 5-year, and 9.2% for the 1-year. Heading down to the management section, these are the average rate of returns. First up, we have the average rate of return on equity, and this is really good to see. We have 19.9% for the 10-year, 22.9% for the 5-year, and 21.9% for the 1-year. Another very important metric down here, we have the return on invested capital, which is 14.3% for the 10-year, 15.9% for the 5-year, and 15.5% for the 1-year. Now there's nothing alarming here that jumps out to me that should be a worry, and these are definitely the kind of growth rates and returns that I would like to see as an investor. Moving on to some of their financial highlights. First up, we have sales growth, and we can see that this has been growing quite steadily over the last 5 years. And net income as well has seen some very significant growth from $2.35 billion in 2016 up to a whopping $4 billion in 2020. Next up, we have some balance sheet highlights. We can see significant growth in their cash and short-term investments with $13.31 billion in 2020. Now it is important for a retailer to be moving their product, so I did want to address the inventories, and this has been growing quite steadily. However, this is because Costco continues to open new stores. Costco has said in previous annual reports that they generally sell inventory before they're required to pay for it, which is extremely valuable for a retailer as they're a lot stronger and liquid with their cash flow than that of other retailers. We can see that their long-term assets such as property, plant, and equipment has continued to grow, and obviously seeing growth in both their total current assets and non-current assets, their total assets has seen growth over the last 5 years. Now looking at some of the liabilities, their accounts payable has continued to grow. However, we did note previously that Costco generally sells inventory before they're required to pay for it. Their long-term debt has moved around a little bit at $10.73 billion as of 2020, bringing their total liabilities to $36.85 billion. Now what stands out to me here is their long-term debt could be paid off completely by their cash and short-term investments. And then obviously Costco tends to move through their inventory fairly quickly, so their accounts payable doesn't seem to be too much of an issue. So overall, I think Costco has quite a strong balance sheet, and there definitely are no red flags for me as an investor. Now Costco did actually release their earnings last Thursday, so I thought that I would quickly touch on a few of the key highlights. First up, we saw that revenue actually came in higher than expected, hitting $44.7 billion when only $43.8 billion was expected. However, they did miss on earnings per share, coming in at $2.14 versus $2.45 expected. For the second quarter, Costco reported total revenues of $44.77 billion, which is up quite nicely from $39.07 billion a year ago. The membership fees also increased, accounting for $881 million versus $816 million in the previous year. Costco did not hit their earnings per share expectation, and they noted that this was due to the COVID-19 premium wages. Costco also mentioned that they were going to boost their minimum wage by $1, bringing it to $16 an hour. This is important because we have seen a little bit of a price war between Walmart, Amazon, and Costco as they compete against each other for employees in an effort to stay ahead of the federal minimum wage. And it does appear that their omni-channel expansion has continued to be a success, with their e-commerce surging 75.8% year over year. Now, if we get into some of the valuation, first up, the most obvious, the PE ratio. Costco's currently trading at a trailing PE of 32.45 and a forward PE of 28.85. Now, I pulled up a chart here that looks back over the last 6 years, and we can see that the PE ratio has been trending upwards over the last 6 years, and they predominantly trade at a multiple between 25 and 30. Now, it does appear to me that investors are putting premiums on companies that have reoccurring payment business models, and we can see that many companies are trying to move to what is seen as a more superior business model. So looking at the PE ratio, it does appear that they're trading a little bit higher than they usually do, even despite the pullback. However, if we look at the forward PE, it sits around about in that range that we predominantly see Costco go for. Now, another key metric here is price to sales, and over the trailing 12 months, Costco has traded at a price to sales of 0.79. Now, if we compare this to some other large retailers, we have Walmart trading at 0.65 price to sales, and we have Target that trades at 0.92. So Costco lands right in the middle of these two. So based on how this metric comes in relation to Costco's competitors, I wouldn't say that they're trading overvalued or trading undervalued based on this metric. Now, Simply Wall Street, which is a great tool for all investors, offers an estimated fair value based on the cash flows the company is expected to generate in the future, and their fair value estimate for Costco is $514.84, meaning that they currently believe Costco is trading 38.4% undervalued. If we take a look at their dividend growth, we can see that back here in 2010, they were paying out 82 cents a share, which equated to 1.4% of the stock price at that time. Fast forward to 2021, as we saw earlier, they're paying out a dividend of $2.80 a share, or 0.88%. Now, it's good to note that Costco does have the ability to grow this dividend, as they're currently only paying out 24% of their earnings retained. Now, another comment that I'll make here is Costco does tend to pay out special dividends. They've had 4 of them in the last 8 years, the last one being in November 2020, when they paid out $4.4 billion or $10 a share. This isn't the only way that they give back to their shareholders. They also have a share buyback program that's been in place since 2005, and this has totaled $9.2 billion in expenditure, which has allowed Costco to retire 131.3 million shares. Next up, we have the recent insider trading, and I often look at this just to get an idea of what those that are on the inside of the company, seeing the day-to-day, are doing with their shares. What you'll notice here is we have seen members of the management team and the board selling out of some of their shares. Now, this does not alarm me too much, as Peter Lynch once said, people will sell their shares for any reason, but they'll buy for only one. So what's more important to me than insider selling is actually insider ownership. And as we can see in the case of Costco, we have quite significant insider ownership, with the president owning 105.8 million, and then we had the vice presidents that range anywhere from 3.6 to 19 million. This is definitely a positive to see as an investor, as it lets us know that the decisions being made by those in charge will more than likely be made with shareholders' best interests in mind. Now, as an investor, it is always important to take note at some of the risks that that company may face, and in Costco's case, number one would definitely be that they're very dependent on the US and Canadian market. Looking at this pie graph, we can see that the United States operations made up 72.4% of Costco's revenues for the first quarter of the 2021 financial year. Canada then made just shy of 14%, which means that between the US and Canada, this makes up over 85% of the total revenue. Now, this is obviously a risk because you could say too many eggs in one basket, where if anything serious was to happen to the US or Canadian economy that resulted in Costco's customers to, for instance, cancel their membership, this would have an enormous impact on Costco's business. Now, this actually leads quite nicely into the second point here, in which I believe the next main risk that they face is the possible expansion failure. As we saw earlier on, Costco has been expanding into new markets and growing within them. So far this has been successful, but there are some risks. For example, expanding within current markets, they have to ensure that as they open new stores, these are bringing in new customers and not taking away from customers that already shop at one of their other locations. And then for expanding into new markets, there are many risks that any company faces as they attempt to grow within another country. Some of the main risks could be things such as government regulation, or even the consumers in that particular market are just not interested in the products and services that Costco provides. Now the final risk that I wanted to touch on, and I know it's obvious, but that is the competitors, the competition. Costco considers their main competitors to be Walmart, Amazon, Kroger, and Target, and for a variety of reasons, customers could choose to shop at these other retailers, and it could be for as simple of a reason as they do not have to pay for a membership to purchase products from any of these competitors. If Costco's customers were to decide that they no longer see value within their membership, they could choose to cancel this and start shopping elsewhere. Now, Costco does make very low margins on the goods that they sell, so losing members would be a key hit to their business. Now, it is a bit of a positive reassurance that they do have quite a high retention rate. However, as always, it's just important to note the possible risks that the company may face. So again, this sell-off, now giving us a discount of about 19% from its all-time highs, seems like it could be an opportunity to add more shares or even potentially open a position.
So there we go. That's my thoughts on Costco as an investment. I think it's a great long-term hold. I don't personally hold it at the moment, but with this current dip, I'm thinking of maybe starting a position. Go ahead and let me know in the comment section below, is Costco something that you've been eyeing? Maybe you prefer one of their competitors. I'd love to hear from you down in the comment section below. Thanks for watching this video. Remember to like, comment, and subscribe to see videos similar to this one. And tell your friends.